G'day guys, and welcome to the weekly VEMA Trader Market Scan. My name is Rhys, and today we'll be running through the trades that we set up last week. We'll go and see how they played out, and then we'll go and take a look at Bitcoin in its current state, see if there's anything we like the look of. We might potentially set up some trades over the next week or two. And so what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so I thought we'd start with the loss we took last week. So I had a long from Alpha that I really liked the look of, to be honest. There was the daily demand zone, the 4-hour demand zone, the 4-hour EQ. There was a lot in that area where I sort of expected to see buying pressure, and there was no buying pressure. You can see price just ate straight through that zone. Now, the only real takeaway I had for this trade was that I actually saw this trade essentially enter and bounce. So, price was back up around here somewhere, and I didn't move my stop. So normally when I see that, I would move my stop, because if price is coming back into that zone, I don't want to be in the trade. For whatever reason, I was looking at it. I normally don't like to move my stop until the candle's closed, so that's probably why that happened. But at the end of the day, didn't move my stop, took the full loss. So the only note that I'd really make there is could have moved stop loss earlier, because I did see it at a time where I could have moved it, reduced my loss. I didn't do that, unfortunately, so I ended up taking the full loss. But that's cool. It was against the high time frame buy, so it was only for 0.5% risk, so that's not the end of the world. For the two trades that are still monitoring, they're both shorts, one from Bravo, one from Charlie. I'm just going to do them both in the one because they're pretty similar. I'm going to leave both these running, right? One of my favorite things about VEMA is that it doesn't actually tie up my margin until it enters a trade. So I used to really have to be careful about which trades I would leave and which I would not put on, because I was using limit orders, so I was tying up margin, and so you can only do that so many times before all your margin's tied up and you might not be in a position. Because with VEMA, it doesn't tie up your margin until it actually enters. I can just leave them there. I'm still quite happy with those being placed as short. In fact, what's happened here is kind of a perfect example, right? I would potentially have had a long sitting and waiting on this daily zone. Obviously that's hindsight trading, but that's how I sort of like to do things. I didn't set up last week because to be honest, I was probably just too confident in that long from Alpha, right? I just went, there's no way price is getting down there now. I'm a big fan of no absolutes in trading, so I wouldn't have actually said there's no way, but I didn't see it as likely enough to bother putting on that trade. Now I regret that because it bounced really nicely from there, so a bit more hindsight trading for you. But for that reason, I am quite happy with those shorts still, and so I'm going to leave them there. They're not tying up margin, so I can do that. If price is to spike up there quite rapidly, it's potentially going to be a really good place to be in a short. And finally, we come to the win, which is always the best part to look at. So this trade, really happy with this. This is on that phase 1 strategy that we've been trialing, and it's really cool to see that. I think it's now 2 for 2, which is awesome. Kind of sucks because my strategy is doing worse, my traditional strategy. But hey, that's what it's all about, right? Collecting that data. It's really cool to see this, because it potentially gives me a new strategy that I can implement. And especially when one of your strategies is going bad, it's really good to have backup strategies that you can rely on. It just helps you, stay confident in the markets. It's really easy to lose confidence when your main strategy starts performing badly, and it's part of trading. Your main strategy will have bad runs at times. So it's been really cool to see this strategy working well. And it's a strategy that I couldn't have done before VEMA, because I used to hate having to look out for candles, having to set alerts, doing all that stuff. The fact that I can just set these candle closes and then VEMA takes care of the rest for me, it's been really fantastic to do. So really happy with this trade. The only thing that I really note is that I took profit. I wouldn't say too early, right? I was quite happy with that take profit when I set this trade up. Maybe I was too confident in that daily demand zone. That could be part of it, but the only real note that I have here is I think it's price continued beyond TP, right? So it's a tag I've used before. Just if I keep seeing that, then I know I can start shooting for bigger targets. And in this case, I could have potentially, I think, roughly doubled. So we went 3.92, nearly tripled. So, and obviously I probably wouldn't have captured that full game, but hey, every little bit counts. So that's really the only note I've got from that win. So I can now mark that as reviewed. And what we'll do is we'll take a look at Bitcoin at the moment. We'll see what we're seeing and if there's any trades to set up. So on the weekly, really nothing of note. I think I say that just about every week, but all we really got last week was a pretty solidly bearish candle, but you can't call it a bearish engulfing because the candle before was way bigger, so it didn't engulf that candle. And then this doji is just for today for the last 6 hours or so. So I'm not going to put any stock into that just yet, although, actually, as I say that, so the one thing to note is it's actually rejected really, really nicely off what I would consider a really weak weekly demand zone. That was the origin of the push, or yeah, that's probably the origin of the push. But it didn't create a higher high. It was quite a weak push after such a massive sell-off. So, just interesting to note that has bounced to the T off it, but not something I'm really paying attention to. I didn't actually know it was there until I started recording this. So, yeah, just a cool little thing to see. And here we are on the dailies now. On the dailies, really still looking very similar to what we had last week. We're still in that big old bear flag we've been watching for, probably over a month now. We're right at the bottom, which is not ideal. In fact, it's probably a good spot for it to break down. Some people think that patterns usually have 5 touches. You'll see them with more, you'll see them with less. It's not something I place a whole lot of stock into, but if you were looking at that here, you potentially got 1, 2, 3, 4, 5. So now the breakout is definitely a solid possibility, or the breakdown. For me, when I look at this, what I think is, most likely to happen, or most likely to happen for me to trade, I guess, because it just suits my trade style, is a short from up here. I can see it's bouncing from here, especially given that last candle, the one that closed this morning. That's a pretty bullish candle. Now, one bullish candle in the face of a huge sell-off doesn't give you a whole lot of confidence, but it's just interesting to see. Pretty solid buy up there, and so we could potentially come back up to that sort of 44, 43 level, and continue up from there or continue down from there, but we could also just break down straight from here. But I just always like to have that idea of what I think the market might do on the dailies, and then I go and try and trade that on the 4 hours. So we'll head to the 4 hour, see what we can see. Okay, now you might be looking at this gallon, it is a complete mess, and to be honest, so was I. Everything here has a purpose. What I was considering doing was just doing a bunch of separate charts and saving them separately, because that would look better for the video. And then I realized, well, this is a good chance to show you guys a cool trick that I use. So one thing that I really like to do when my charts do get messy, or not even necessarily when they're getting messy, but when I'm just trying to focus on one thing at a time, is come into the object tree. So to get to it, you can just right click any object you've got, go to object tree, and then from there you can actually hide different tools that you've put on the chart. So you can really clean your charts up that way without actually deleting them and having to redraw. So I won't show you guys how I use that for every single trade we're about to set up, because it'll just be a pain as I try and figure out, which one's this parallel channel. You can name them if you want to. But what I'll do is I will use that to clean up each setup and then go through that setup and why I've got those things there, and it'll just have less noise. So I will get started on some of them, and I'll see you guys in a second. Righto, so starting with the most obvious, so Charlie and Bravo are actually the Charlie and Bravo trades we set up last week. So I won't actually bother setting up any trades on them because they were set up last week, but I just wanted to have them on the chart so I know where those zones are, where I'm shorting from for them. Righto, so the first trade that we are looking at is the long from Delta. Now, what I like about this zone is there's a 4 hour zone here, and we had a really solid push out of it. Now, I wouldn't quite call it a market structure change, because to me, that is the high that I consider important currently on the 4 hour. But I do market structure a little bit differently than most people. A lot of people would be saying that's the most recent high, and we've got the market structure change there. So, depending on how you look at things, that might affect that. But I've had this strategy that I've wanted to test for a long time, and I just sort of haven't got around to it, of essentially buying the retest or selling, depending on what happens, but of really big pushes. So when that zone is retested, just having orders waiting to catch that retest if it does hold or if it does get back down there. Now, one thing that I do really like about this trade is there's potentially a wick-off accumulation zone here. Now, I am not by any means a wick-off expert, and it might be Wyckoff. I know Donnie's pulled me up on it before, I just can't remember which way I was saying it. So we will go with, I think it's Wyckoff. We'll go with Wyckoff. So for anyone not familiar, basically Wyckoff is a way of looking at the market as if it is one person you're trading against, right? They call it the composite man, and I won't go in and label it all because I don't want to, pretty much, to be perfectly honest, and mostly because I'm really not well versed in Wyckoff to the point that I would feel comfortable labeling it. But what I like about that is one of the big things in Wyckoff is a spring, right? And a spring is essentially like a liquidity grab, right? You had these lows, people were going long from here, and then you've seen this dive down to collect all these stop losses that were potentially down there. So that to me looks like it could potentially be a Wyckoff spring. You know, not every liquidity grab is a spring, and not every spring is a liquidity grab necessarily, but it just has the rough shape of that to me. So I'm quite interested in this zone. Not interested or not confident enough to long it for real money, but one of my favorite things about VEMA is you can just paper trade and test these strategies. So in terms of risk management, it's against my high time frame bias. So I've gone for 0.5% risk. I'm just using a fixed value stop loss, fixed value take profit. Now, you could potentially target this zone here, this first one. But the way I see it is I'm going to target that second one, and then I can always come back and adjust if we get to there and we're not looking really sharp. My journal, what I've tagged is the 4-hour demand zone against my high time frame bias, bearish daily bias, big push zone. So that's what I'm labeling this new strategy that I have wanted to test for a long time. Awful name. So as always, open to better suggestions, and test strategy, because that's what I like to tag when I'm testing strategies, so that I can exclude that later on when I'm analysing data on my real trading. I'm going to leave those at 5. It's, you know, the fact it's basically just this zone and not a whole lot else that I am buying because of makes me not as confident. In fact, I'm actually going to go down to a 4, and I am quite happy today. So that is the Delta long. The second new trade that I've got for you guys is a long from Echo. Now, this is a trade that I do prefer to the other one, just for the sense of it is what I'm more familiar with. It is 2 4-hour demand zones, one on top of the other, a really strong 4-hour EQ. It's actually with the daily, there's a daily demand zone as well, and our weekly zone that we saw that really perfect bounce off. There's, you know, potentially a really good reason for buyers to be stepping in here. That said, if we get down here, it sort of will likely confirm the breakdown of that bear flag. And, you know, because my daily bias is bearish, I'm going for 0.5% account risk. And then my tags are the pretty standard ones. Demand zone, EQ, against my high time frame bias, bearish daily bias. So I am targeting that lower zone for this one, because if we get down here, it means price has penetrated further down, which is, you know, obviously more bearish, and so I want to be more conservative with my take profit in that case. So that is it for that one, and then we'll head to the shorts. And now we come to the shorts. Now, my favourite short I've actually missed. It would have actually been a short off this most recent supply zone. Unfortunately, did not get the chance to put that on. I wouldn't put it on now, because if price gets back up there, I wouldn't really want to be getting into it. It's looking quite good. You know, that's a really nice solid rejection we've seen from there, but not much I can do about it. Missed my chance, so onwards and upwards. I'll get rid of that. I'll just hide it because I use it for one of my other trades. And we will take a look at the 2 shorts that I can set up and actually do something with. So I have got a short from Golf. What, full 1% account risk, because it is with my high time frame bias. My stop loss is just slightly on the other side of the zone. In fact, I might actually move that up, because I've just noticed that little wick just here on this candle that I had missed. So let's just make that 42460, just to give us a little bit more breathing room on top of that wick. Shouldn't change too much. And then we come down to the journal. So I have tagged 4-hour EQ. That is quite a solid level. It's been really well respected before. That's the reason. I actually wasn't too keen on this short until I saw that, because I was just sort of looking at the zone of the 38 fib. As soon as I saw that EQ, I was like, no, actually, I do quite like that. So I've added that in. As always, I tag fibs and the fib level specifically, and it's with my high time frame bias. I am targeting that lower zone, because if we do reject from here, then price hasn't really seen buyers come in, and so, you know, we're more likely to hunt for sellers a bit lower, potentially continuing that same market structure of down, up, down. And so that is where things are at. So it's a whopping 8.1421. Now, anyone who has seen my maximum risk, minimum opportunity, that is the complete opposite, minimum risk, maximum opportunity video, will probably see that, you know, when you are shorting in a bear market, you can often get much bigger risk rewards than when you are longing in a bear market. I think both of our longs are about 4-1, so that 8-1, fantastic if we can get that. I'm about a 6 confidence in this, and I am happy. So then we come to Foxtrot. Now that is the higher short, because it is from higher up. Now what I like about this zone, pretty similar in terms of risk management and everything else. What I like about this zone is it is a daily zone with a 4-hour zone just in front of it. It's got a 50 fib there. It's also actually a pretty decent 4-hour EQ. Now that I see that, it's been support there, resistance here. So quite a nice EQ. So there is quite a lot I like there. Let's actually add 4-hour EQ to that. And I am a 6, and I am happy. I hope I'm more than a 6 in terms of looks, but you guys be the judge of that. But in terms of my confidence, I am a 6. And yeah, this one's a 4-to-1. It does have a bit of a bigger zone because it's that daily zone that I'm really using for my stop loss. And I could potentially target further, but I'm quite happy to just take that 4-to-1 and get it out if price does get there. Now, the other thing is there will potentially be this trend line coming to meet Foxtrot and price. Price was to sort of do something like that. They could all line up together really nicely. So it will be quite interesting to see how that goes for our trend line, I think. Yep, beautiful. And so that is it. So that's it from me. Those are the trades that I'm looking at for this week. So we'll submit them, make sure they get saved. And that is it from me for the week. So hopefully you guys all had a fantastic weekend, long weekend in Australia, which was awesome. And yeah, have a great day, happy trading, and I'll talk to you guys very soon.